All right, let's talk about something every trader has felt but maybe couldn't put a name to. If you've ever looked at your screen and just wondered, why on earth did I do that? Well, you're in exactly the right place. We're going to pull back the curtain on the hidden mental traps that can completely derail a perfect trading strategy. Let's get right into it.
I mean, this is it, right? This is the classic, maddening question that keeps traders up at night. You do all the research, you have a solid plan, but then, in the heat of the moment, you watch a tiny loss just balloon. Or you get a little profit and you snatch it up, only to watch the trade rocket higher without you? What is going on?
And here's the twist. The answer isn't on your screen. It's not a faulty indicator, it's not a bad signal from the market. The real reason this happens over and over again is because of the weird and often totally irrational wiring inside our own skulls. Yep, we're talking about cognitive biases. You can think of them as these little mental shortcuts, or, well, mind traps is a better word. In our normal lives, they help us make quick decisions. But in the world of trading, oh man, they are incredibly destructive. They warp how we see reality and lead us to make the exact wrong move.
Now, here's the most important thing to get. Having these biases doesn't mean you're a bad trader. It just means you're human. Our brains come pre-installed with this software. So the first step to beating them is just knowing they exist. Let's break down 4 of the biggest and most expensive ones.
First up is a huge one, confirmation bias. This is that sneaky tendency we have to fall head over heels in love with our own ideas. We basically build a little echo chamber for ourselves that only tells us exactly what we want to hear. So let's say you're bullish on a stock. Your brain will subconsciously go on a mission to find every article, every tweet, every chart pattern that agrees with you. And all that evidence screaming, hey, this is a terrible idea, piff, you'll ignore it, dismiss it, or explain it away. It feels good, but it gives you a totally one-sided, dangerous view of the market. Sound familiar? Of course it does. You're not really analyzing the market anymore, you're just building a legal case for a decision you already made with your gut. It's validating, it feels great, and it's how you get blindsided. So how in the world do you break out of this echo chamber? You have to force yourself to be a skeptic. Literally play devil's advocate with your own trades. Go out and actively look for reasons your idea might be wrong. And the ultimate weapon? Create a rigid, objective checklist with your entry and exit rules before a single dollar is at risk.
Okay, on to the next mind trap. This one is all about getting stuck, mentally glued to a piece of information that is completely irrelevant now. We call it anchoring bias. For traders, the most dangerous anchor in the world is the price you paid for something. We get so latched onto that number, it becomes this magnetic force that dictates all of our future decisions, even when the market is screaming at us that that price is ancient history and means absolutely nothing today. Oh, this thought has destroyed more trading accounts than anything else. You have to understand, the market has no memory. It doesn't know what you paid, and it certainly doesn't care. Holding a loser just to get your money back is the definition of being hopelessly anchored to the past. The only way to break free is to drag yourself into the present. Ask yourself this brutally honest question. Forgetting what I paid for it, would I buy this stock right now at this price? If the answer is a hard no, then why are you still holding it? Your decisions have to be based on what the market is doing today, not on what you did yesterday. All right, now for a really powerful one. This one gets right to the core of our emotions as human beings. Let's talk about loss aversion. It's a simple but profound idea. The psychological pain of losing, say, $500 is way more intense than the pleasure you get from gaining $500. Our brains are just hardwired to avoid pain at all costs. And in trading, that wiring makes us do really dumb things like, you guessed it, holding losers and selling winners. And this shows you the problem perfectly. The emotional scale is totally broken. That intense, gut-wrenching fear of realizing that $500 loss, that's what tempts you to move your stop loss just a little bit lower, turning a small, acceptable loss into a disaster. And on the flip side, that little rush of pleasure from a small gain makes you desperate to lock it in, so you get out way too soon. The only antidote to this is pure mechanical discipline. You have to rip the emotion out of the equation with a system. You set your stop loss, you set your profit target based on a logical risk-to-reward setup. And then, and this is the hardest part of trading, you don't touch them. You have to focus on executing your plan, not on the money. All right, let's look at a trap that's a little different. This is the one that sneaks up on you when everything's going great. I call it the overconfidence curse.
You know how it is. You string together a few winning trades, and suddenly you start to feel like a market genius, like you finally cracked the code. And that's exactly when you get reckless. You start thinking your success was all skill, and you completely forget that luck might have played a little role.
And you can see how this escalates, right? After one nice win, you're disciplined, you stick to the plan. After 3 in a row, maybe you bend the rules a little, take a slightly bigger position. But after 5 straight wins, you feel invincible. Your rules go out the window, you take on massive risk, and you set yourself up for a catastrophic loss that wipes out all your gains and then some. To fight this, you need a healthy dose of humility. Your risk management rules are never more important than when you're winning. Keep your position size consistent, no matter how good you feel. Review every single trade, win or lose, and ask, did I follow my process or did I just get lucky? Always remember, the market will humble anyone who gets too cocky.
And look, these 4 are just the big ones. The truth is, the mind is a minefield for traders. You've got recency bias, which makes us freak out about the latest news story and forget the long-term trend, or hindsight bias, that I knew it all along feeling after a trade works out. The list goes on and on.
Okay, so after hearing about all the ways your brain is actively trying to sabotage you, it's easy to feel a little overwhelmed. But here's the good news. There is one single powerful antidote that works against all of these biases.
Here it is. Your real edge in the market has nothing to do with a secret indicator or a magic formula. Your edge is your process. It's focusing on executing your plan perfectly, not on how much money you made or lost on one trade. It's having ironclad risk management rules you never ever break. It's about building a system of objective rules specifically designed to protect you from your own worst instincts. In the end, you have to realize the market isn't personal. It's just a giant mirror. It reflects the sum of everyone's decisions, their fear, their greed, their discipline, and yours. It will reflect your chaos, or it will reflect your plan. So the only real question is, which version of yourself are you going to bring to the market every day?